And joining us now, Gordon Fellows, president of the Mississippi Bankers Association. Gordon, thanks for coming on. How you doing today, sir?
Gerard, I'm good. Good morning. It's good to be with you.
Yes, sir. So, wow, a lot has occurred in your industry the last few weeks, for sure. But we wanted to talk to you specifically about a final rule issued by the Consumer Financial Protection Bureau. And this is a rule that I believe is several years in the making.
Right.
Emanates from Dodd-Frank, correct? So you got a final rule, and the ICBA, the Independent Community Bankers of America, aren't too happy about this rule. So tell us what's going on here.
Yeah, well, you're right. It is a Dodd-Frank rule, and it's kind of mind-blowing to think that a bill that was passed over a decade ago is still being implemented by federal agencies. But there are several pieces of Dodd-Frank that are yet to be enacted. This is one of the more challenging and complicated parts of it. So the small business data collection rule is created by Section 1071 of Dodd-Frank. So it's called the Section 1071 rule. That's the most technical thing I'll say. So, but it is the Obama administration recognized that this would be very complicated, and so they were unable to do it. The Trump administration sort of realized that it would be probably really potentially negative to small business growth. And so they sort of intentionally, I wouldn't use the term ignored it, but kind of did not make it a high priority. Then they were sued by some groups out of California to implement the rule. And then after the election and the Trump administration transitioned to the Biden administration, the plaintiffs in that case and the new director at the CFPB agreed to April 1st of this year enactment period. So the rule was announced late last week ahead of that enactment period, as per the litigation agreement. So complicated path to get here, right? I mean, when you're talking about litigation to determine when a rule is going to be published, right, it's clearly not a simple and easy thing. And we've issued comments on this for years. We've talked to our congressional delegation about it for years and federal regulators. And sort of the net is going to be, as it gets implemented, and there's a implementation period through 2024, and the implementation is staggered depending on the size of the lender and how many business loans the lender makes. But anybody that makes small business loans, whether it's a bank or a non-bank lender, once they pass those thresholds, is going to be subject to gathering data from borrowers on business credits. That's sort of akin to what happens on mortgage loans right now, right? So it's not supposed to be identifiable. Right now, there's a law called the Home Mortgage Disclosure Act, or HMDA, and mortgage lenders that are of a certain size of originations have to gather and report data, and they're mindful, right? The rules are mindful to not report personally identifiable data, so it's trend data more than personal identification data. But we're really worried in this Section 1071 rule, this small business data collection rule, that the Consumer Financial Protection Bureau went way beyond the statutory requirement data fields, right? So Dodd-Frank said they got to collect a certain amount of data, and then the Biden administration added in additional data beyond what the statute requires.
So what's the rationale for that, though, Gordon? I'm sorry to interrupt you, but I don't understand what that has to do with a financial institution determining the credit worthiness of a potential borrower. Isn't that what the primary goal should be when you loan money?
Yeah, I mean, I think that question is a really good one. And then I also think, what are the privacy implications for the business borrowers is also really important here, right? Because if you're a small business in a small rural community, there may only be one or two people that provide the service you provide that rural community. And then all of a sudden, data gathered about you in that small community, depending on what your NAICS code is or could be really problematic, right? From a business intelligence point of view. So your question is a really good one, and I think the rule is going to cause problems along those lines. I also think the privacy issues are a real big one, it's these are all points that we made during the regulatory process. In fact, a group of bankers that met with the CFPB director in September, and all we talked about for an hour was this rule and all the potential problems it could cause. I don't think it was written from the perspective of rural America, right? I think it was written from an urban perspective, and it's unfortunate that they didn't listen to some more of the rural concerns that we raised. Now that being said, right, the rule was issued on Thursday, and it's hundreds of pages long, and so we're all still digesting it. But the sort of top line takeaway is that they didn't make a lot of the recommendations that Rural Bank suggested, and that's problematic, I think. So I appreciate you bringing it up. I think it's important for business owners in Mississippi to know, over the course of the next 18 months, you're going to start being asked questions by your lender that you haven't been asked before, and it's not because the lender is nosy, it's because the lender is now required to ask those questions. And so you may want to start talking to your banks, now about what that is going to entail. Again, the banks are, just starting to digest the final rule because it just came out Thursday. It's certainly something business owners in Mississippi need to be aware of, because it's going to change the process by which business credit is extended, and that's always confusing in the beginning. So, and then there's no pending court action on this yet, but there is significant court action pending on the constitutional structure of the CFPB, and that could impact this. At some point, I don't know. We'll have to sort of see where the courts take all that, but it's a potential sort of change event for small businesses in Mississippi, and I want to make sure business owners are well aware of it.
And in the statement, Gordon, I read from ICBA, this is kind of bizarre. It looks like it takes effect October of 24, and the threshold in terms of banks that it would apply to based on the number of loans made by a bank in a year actually declines, phases out over time, starting at 2,500 loans in 24 and then down to 100 in 26. I can't believe there's any banks that even exist that make fewer than 100.
Yeah, I think that was the point, was to pull every lender they could into it. I mean, I don't think they wanted to give I think they wanted to give an exemption in name for small lenders, but not in practice.
Wow.
And farm loans are included as business loans, and so small rural banks in the Mississippi Delta, they all make 100 loans if you think of business and farm loans together. So it's going to be really complicated, and it's important for businesses to know this is coming. And it's also, the Consumer Financial Protection Bureau is a relatively new agency. It was created by Dodd-Frank, right? It's Elizabeth Warren's brainchild, right? So this is not, it's not a long-standing federal agency that a lot of people are familiar with, like the U.S. Treasury, right? So you walk into your bank and they say, well, I've got this new CFPB rule that we have to adhere to, so we got to ask you these questions. A lot of people are going to be, well, what's the CFPB? So it's a legitimate agency, and they set a lot of rules, and we have to live by them, and that's sort of the consequence of when Congress passes legislation that empowers agencies to do a lot of stuff. This is what you get. So,
unbelievable. And we got just about a minute or so left, but this has got to be awkward and uncomfortable for the bankers as well, Gordon.
Absolutely. Community banking, the relationship business model that we have in Mississippi is built on trust and relationship. And so when you have to start asking questions beyond creditworthiness, that's not anything that we want to do, right? In fact, we've been saying it for years, really almost a decade now. This rule is going to cause us problems operationally, and it's going to be bad for small businesses. So, in rural markets. So make it easy on us and exempt rural lenders, and recognize, Bureau, that rural markets are different than urban markets, and they need to be treated differently. But the Bureau kind of ignored those recommendations.
Gordon, appreciate you joining us. I got a final statement I'll make. I feel like this is another situation where an agency has gone rogue and has exceeded really the intent of the original law. That's why it took them 10 years to implement it. No doubt about it.
I think you're dead on.
Gordon, appreciate you joining us, and I'm sure we'll be talking about this more. Thanks, sir.
Yep, good to talk to you. Thank you, Gerard.
We'll be right back in the Element Wealth studios. Stay with us.